Okay, we've seen how to cover the cost of care with insurance. Next, how to afford the cost of that insurance. For that, we need a little perspective.
Kim, since this is such a gigantic issue for boomers, I thought this would be the perfect spot to talk about the cost of long-term care insurance. Since long-term care costs so much, I assume long-term care insurance is very expensive too.
Well, actually, the cost of the policy depends on a number of things, especially your health and your age when you buy the policy. If you're in good health, just like with life insurance, you'll generally get a discount. Also, if you buy the policy when you're 55 years old, you'll generally pay lower premiums than if you buy it when you're 65 years old, because you'll be paying premiums for longer before you collect on the benefit.
Kim, do you have an example?
Sure. Say a 55-year-old buys a policy with a $200 daily benefit, a 90-day waiting period, 3-year benefit period, and 5% compound inflation protection. He'll generally pay about $2,000 a year in coverage.
And if a 65-year-old buys that same policy at age 65?
Age 65, he'll generally pay about $1,000 per year more in premiums.
Okay, is there a sweet spot for the age to buy these policies, the right time to buy long-term care insurance?
Well, most experts recommend buying a policy in your 50s or 60s. If you wait longer than that, the premiums will generally be higher, and it's more likely that you'll have a medical condition that may make it more difficult to get coverage.
If you decide to buy a policy, is there any ways to hold down the premiums?
Well, one way is to extend the elimination period or to lower the daily benefits. Either way, you end up paying for some of the cost yourself out of your own pocket.
And what about the benefit period? I know some policies offer 2 years of benefits, some offer unlimited benefits. How do you choose?
Well, there are policies that provide unlimited lifetime benefits, and they tend to be very expensive, and they're often unnecessary because many times most people's claims end up lasting for about 3 years.
And what about inflation protection?
Inflation protection is one area where you don't want to skimp. This is the type of insurance where you may not need to collect on it for 20 years or more, so you need to make sure that your benefit amount is keeping up with the cost of care.
Any other tips?
Well, married couples can generally get a discount if they buy coverage together because they're more likely to help care for each other for a while before they submit a claim.
What about the shared benefit that I hear about?
Well, shared benefit can be a great deal for couples. It provides a pool of benefits, so if one person needs extra coverage, they can use the other person's benefits.
How does that work?
Well, say for example that each person in a couple buys a 2-year benefit period. You actually get a pool of 4 years. So say the husband needs care for 1 year, then the wife can have 3-year benefits if she needs them.
Thanks, Kim. As usual, your no-nonsense approach makes this a lot less scary.
Well, thank you. The more information people have, the better. And in fact, state and local governments have really been ramping up efforts to educate people about long-term care so they can make some good decisions for their future.
Kim, if long-term care insurance is such a good idea, why don't more people have it?
Well, frankly, for a lot of people, it's too expensive. If your only income is coming from Social Security, then you can't really afford this kind of coverage.
Let's sit down and talk about this. What about private employers? Do they offer their workers coverage under group policies like they do for health and life insurance?
Actually, more employers do. In fact, the federal government about 5 years ago started to offer policies to its employees, retirees, and their families, and more than 200,000 people signed up for coverage.
What about private employers? Do any of them offer group long-term care policies?
Yep, more private employers are starting to offer policies too.
Is that a good deal for employees?
Well, it depends. Many employers don't require you to take a medical exam, so if you have any health issues, you're guaranteed coverage even if you have a health problem.
Well, what about the healthy employee?
Well, employers generally don't subsidize the cost of the premiums like they do with health insurance, so it's worthwhile to check out the policies on your own as well as to compare it to the cost of the group coverage.
Are governments doing anything else to encourage people to buy long-term care insurance?
Well, in a growing number of states, you can buy something called a partnership policy.
What's that?
Well, the states generally make a deal that means that if you buy a long-term care policy, you can qualify to get help from Medicaid without having to spend almost all of your assets.
So it's a way to protect a legacy for your heirs.
Exactly. It's great for your heirs, and it's also a good deal for the states to help shore up their Medicaid program.
Thank you very much.
Thank you.
Okay, now that we've got the facts, let's say you want to look into buying a policy. Mary Beth Franklin will give us advice on the next step.
So when did you decide you needed long-term care insurance?
Well, about 5 years ago, we decided that we needed to look into it, and I've been in purchasing all my life, and so we shopped for it and looked around, and it turned out to be fairly expensive. And we also had 3 kids in college at that time, too.
But since then, you've bought long-term care insurance. What changed?
Well, my dad had this injury and the alarm went off. We saw the tremendous burden it was on my stepmother, and at the same time, my employer offered insurance to us at a much more reasonable rate, and it was affordable. We just couldn't afford not to do it.
Well, Mary Beth, Kathy, and John have got their policy, but for most boomers, this is a strange area. We know how to buy homeowners insurance and life insurance and car insurance, but long-term care insurance? How do you buy long-term care insurance?
Well, take a tip from John and Kathy and do your homework. Probably you want to start with the cost of care. It's going to depend where you live, and it can vary widely from one part of the country to the other.
Okay, how do you pick an insurance company?
Well, you want a stable insurance company that's going to be there when you need benefits, which frankly could be 20 or 30 years from now.
Okay, and what about affordability?
It's really important that you can afford it comfortably now and in the future when your paycheck stops.
Is there anything else we need to know about the way insurance companies set their premiums?
Yeah, rate increases. In the past, there were some companies that priced their policies too low and then were forced to raise premiums on existing policyholders. That's a surprise you can do without. So ideally, you want a company that has never raised rates on existing policyholders.
You know, it sounds like this isn't something you can click and buy on the internet.
The internet is a great place to start your research, to compare insurers and prices, but when you're ready to buy, you need a real person, a financial advisor, or someone who has your best interests in mind, so they can help build a policy that works for you and that you can afford.
That's a lot of information and a lot to think about. The main thing about long-term care insurance is to do your homework, get professional help, and then make the decision that makes sense for you.
Thank you for joining us. We hope this video has helped you better understand what your potential need for long-term care might be and how you would finance it if the need arises. About a year ago, our company took a look at this issue, and we decided to offer optional group coverage for long-term care to all of our employees. Many of our employees decided to buy this coverage. I'm one of them. My wife and I, at age 60 and in excellent health today, just don't know what the future might bring. We're very comfortable paying regular premiums against some future unknown need. It makes sense for us. I encourage you to consider whether it makes sense for you also.